All right. Good morning, everybody. Happy hump day. We're live as always. I'm going to be trading our indicator today. And if you are new here, we built our own indicator. It's called Invest with Jacob Pivot Point Pro and does a great job of predicting reversals in the market. And we demonstrate it every Wednesday with a live call like we're on right now. We live trade with it. And some days it goes great, some days it doesn't. That's kind of part of trading. Nothing is going to be perfect. The idea here is to teach you and help you understand how trading works, how day trading works, how swing trading works, how all of that goes together, and how an indicator can really help you take emotion out of the market, because quite frankly, emotion is what kills bank accounts. If you watched my video at all yesterday, I gave the large video or the large midday call as the update. And I think in that, I do like 3 calls a day, so I forget. But I think in that I talked about emotion, where if you think about dating and you think about all the terrible decisions you make when you are in love or falling out of love, whether it be terrible drunk phone calls or screaming matches or any other thing that, or you propose to somebody after 2 dates because you think you're in love with them or something like that. It's all based on emotion and not rational thinking. And that's what trading does to people, because when you start to make or lose money, you become euphoric and or desperate, depending on which way you're going. And that causes you to have too much confidence or too much fear. And that really wrecks accounts. So what we tried to do is we tried to create a forward-looking price action indicator that was different than anything on the market. Everything else on the market looks for moving averages to do something. It looks for the RSI, it looks for the MACD, it looks for all things that happen in the past, all things that take a while to recover. So when you get an oversold market or an overbought market, there we go. When you get an overbought market, right? They're buying the market. Well, the only way to correct an overbought market in the indicators that are out there now is you start to come down. Well, now finally here it says, okay, there's a cross. The momentum has stopped to the upside. Now you can enter short. Well, you've already missed all of this. And you enter way down here at support, and then by that time it does this and you lose. So those indicators very often are late to the market, and if you don't have a big run or a big trend, you get left out of the move, and oftentimes you get put in a losing position, where our indicator, you can see right here, hit a key level yesterday and immediately dropped and immediately gave us the sell signal right at the top. It didn't have to wait till way down here when we got the bounce or anything else. It gave us the sell signal right out of the gate, and we were able to come down and break through the pre-market low, make a really nice winning trade, and establish a trend day. Now, if you're looking at this and you're going, yeah, but look at these buy signals. Well, if you go over here if you buy the indicator and you come over here to this page, this is what happens when you buy the indicator. You put in your trading view information so I can get you the indicator, and then you set up everything, and then you come down here. There is a trend day strategy video. We show you how to identify a trend day and what to do. And in those cases, we ignore these buy signals because it's a trend day down. And we identified that very early yesterday. We always take the first counter trend signal, because what happens is, in this case, you had a trend day going up, right? We were coming up. We got the first signal of the day, and it was a failed breakout. So that failed breakout becomes this. So we always take the first signal, because if the trend is going to fail, you can get a very, very large move down or up, depending on what the opposite move is. So we gave them a chance to have a failed breakdown. We had a really nice winning trade. We had a small losing trade. And then we ignore the buy signals after that. We don't use these anymore. And it's really easy to identify a trend day. The video explains it all, but essentially you break the pre-market high or low, back test VWAP in the 21, which I have on my chart here, hold, and create a new low here. As soon as they create a new low, the trend is in effect. So they created a new low. Now we ignore this buy signal, We took this sell signal, which is a winner, and then we reached 10 o'clock, which is when we stopped trading because this is a morning game or an early day game. So for day trading especially, it is absolutely, well, actually not especially, for day trading and swing trading, this indicator absolutely crushes if you follow very, very simple rules. So we had 2 winning trades, 1 losing trade yesterday, and this winner here was a really big winner, this here was an okay winner, and this was a small loser. So a great day, and that tends to be how it goes for us. Do we have losing days? Yes. We are here trading real trades. We're not trading, make 500% on this one trade tomorrow. That's not real life. We trade real trades, we trade real strategies, we trade real trading plans with very strong risk-reward setups, and that allows us to have very, very good results. Our results for the last 2 years, if you watched yesterday's video, we are up $70,000, trading 25 contracts per trade on a $100,000 account. $70,000 in 18 months. I'm going to put it on the screen here real quick. And these numbers are verified by people in my room. They know that all of this is accurate. Matt, who is one of my paid subscribers, you can watch any of my videos. I put up his posts every video so that you can see exactly what our results are. And you can see we had bad results sometimes. November and December last year, terrible. May was not a great month. There's a lot of odd movement in the market where everything gapped up or down pre-market and then went sideways all day. There wasn't great movement during the day trading sessions, so we had a negative month. That happens. Losing happens. But if you look at our negative months, the only one that was really truly bad was last November, and it was just really weird. Everything went against everything you would expect for an entire month. Out of 18 months, that happened one time. So it's an anomaly. We also made improvements, and you can see that this year we had almost 15,000 in January, 5,000, almost 10,000 in March, 3,000, negative 2250, almost 5,000 again in June, and this goes on over and over again. Our losing months, if you look at all of them, negative 550, very small losing month. Negative 6,000, that was a bad month. I told you it's an anomaly. It is what it is. Negative 1,700, pretty small losing month in comparison to the winning months. And then negative 2,250, pretty small losing month in comparison to the winning months. That's what you're looking for. You're looking for a risk-reward setup that wins over time. This is not a one-trade game. This is not a one-day game. This is a lifetime game. This is a years-long game. And over the past 18 months, we're absolutely killing it. I don't say that as a hyperbole joke to sell the indicator. I say that as you can see the numbers. So the indicator works really, really well if you follow very simple rules and you take emotion out of trading. The number one destroyer of accounts, again, emotion, which is boredom, fear of losing out, fear of losing everything, fear of missing out, revenge trading, being angry because the market is quote-unquote rigged. It's not rigged. In fact, it's so not rigged that we predict what it's going to do more often than not. So it's an incredible indicator. I want you guys to be a part of it. I'm running specials today, 30% off of your first month using code monthly30. And if you want to go for the yearly, you come over to our membership plans. I'm giving you our Elliott Wave courses, both for free. If you come down here, you can see that that's $177 normally. I'm giving you that for free. And you're also getting 2 months for free with the yearly indicator. And you get a 30-day money-back guarantee. So even if you don't like it, you get your money back. And what I tell people is, they're like, well, if it doesn't work the way I think, I'm going to lose money. Don't. If that's a fear you have, if that's something you're afraid of, is you get the indicator and you lose your own money because you traded with it. If that's your fear, don't trade with it. Get it, put it on your chart for 30 days, watch it, paper trade it so you don't lose any money. You can trade it still but not lose any money. See how it works, and if you love it, keep it and trade with it. If you don't love it, get your money back. You risked nothing, and you got to check it out. It doesn't hurt to try something new. In fact, I encourage you to do that every single day, not necessarily in trading, but just in your life. And you may find that it's the thing you've been looking for to fix the issues you have. Most people are really bad traders and they won't admit it. They'll make excuses that, oh, the market did this or my broker did that or whatever. Most of the time, you're just a really bad trader. And that's not to be harsh or mean. Trading is an incredibly hard game. It took me many, many, many years and blown up accounts to get good at it. And then I realized that the number one killer of what I was doing was, sorry, it's cold in my room and I'm shaking a little. The number one killer of what I was doing was trading for no reason, not having a plan, and then emotionally trading. So what I wanted to do was create something that eliminated that and equalized the market for everyone and made it simple. You don't have to look at 100 charts, you look at one chart, the chart you want to trade. It doesn't have to be the SPY, it works on every single index, it works on every single stock. Whatever you want to trade on, it'll work on. Now, I do highly encourage, especially if you're day trading, that you trade bigger, more liquid stocks because you need to be able to get in and out of them. Even swing trading, you want to trade the bigger stocks that move, because if you're trading something like, say, P&G, that's a dividend stock, or Verizon or something like that, they don't tend to move huge. I mean, they have their moments, of course, but a lot of times they're very choppy and slow. So you want to trade things that have a lot more movement. The Mag 7 are all good candidates. Any of the indexes, anything that's traded heavily, because that's going to have the most emotion and sentiment in it. And that's not to say that it can't work on those other things. It's to say it's not the best option, and I want the best option, me personally. So the best option is trading more popular liquid stocks, because you will get that movement, you will get established volume, key levels, all the things that you really need for the indicator to be great. And that's where you're going to be the most successful. Now, for setup purposes, you do need pre-market trading and post-market trading on. So if you go down here to your settings, it's going to say session. You just need to put on extended trading hours right here. And that will put on this yellow and blue box. Well, whatever color you want to make it. For me, it's yellow and blue. Blue being post-market, yellow being pre-market. It's all the same, honestly. They just make a divider at midnight, and then it switches over to the next day of trading. So the yellow is essentially today, blue was after the market yesterday. But you need this on because it establishes your levels. The Globex trading, which is what they call this, the Globex trading establishes key levels for the day. And that helps the indicator know when and where to make decisions. You do need real-time data on the ES and the NQ. So if you have the ES1 up, like I do right here, if you look in this box over here on the right, so you have the ES and the NQ. If you don't have real-time data, there will be a little tiny D, which means delayed. So you're getting a 10-minute delay on your chart. And that means is the indicator doesn't get that value till so it gets the SPY value immediately. And then we move 2 bars later, and then the ES prints that value, and then you see on the SPY chart the sell come up. I've had people say, "Hey, this doesn't this puts signals on there retroactively." So it's not putting them on there retroactively, it's that you don't have real-time data. So it has to wait until that real-time data, or till that data comes through 10 minutes later, which is 2 bars later on the 5-minute chart, and the market may have already moved like this on this sell. So you wouldn't have got the sell signal till 6:20, even though it appeared at 6:10, because you don't have real-time data. So make sure you have that set up properly. Again, if there's a little D over here on the right next to ES or NQ, you do not have real-time data. Morning, Sam. Welcome to the stream. So those are all of the major things that we use how we use this indicator, all of the major reasons we fail at trading, all of the things that the indicator is designed to do. It takes 175 inputs, Actually, it's like 178, but I like round numbers. 175 inputs, and they're all weighted. So does it still use the RSI and things like that? Yes, in different ways at different times. Those are what help it identify momentum after the move has been established. But what it does is takes 175 inputs and they're weighted. So the RSI might be weighted 5%, and this high volume level might be weighted 20% because it's much more important. It creates a value, and when that value exceeds a certain number, it creates a buy or sell signal. So what it's looking for here is it's looking to hit a key level, then it's looking to start to reverse, and if it sees weakness, it's going to issue a buy or sell. Now, one of the things it does factor is volume. And when you're in the pre-market, the reason we don't trade overnight in pre-market trading is volume, you can see down here, is non-existent. There's no volume that gets traded, so it's hard for the indicator to fully operate in the way it's designed. That's why November is a hard month, because there's so many holidays and it's very low volume trading the whole month. We never have a good November, but last November was particularly bad. Volume is a key factor in this indicator because that's where the key levels are. So what it's looking for is right now, even though you have a sell signal, the market is in a buying cycle, right? We're going up in trend. But what it sees is weakness based on the factors, the 175 inputs. It sees weakness in this move up. And what it does is it says there's a very likely situation here for us to drop 7 to 10 ES points. So about 70 cents to $1 on the SPY, with potential for it to continue. So we're looking for 7 to 10 points, or 1 point on the SPY, with potential for it to continue. That 7 to 10 points gives us our first win in the trade. We take a 20% win up front, and then if it does continue, we have runners that collect that. The reason we do that is our risk reward setup. So you have your baseline here, you have your stop at the bottom or below, this is your stop area. This is your 20% win, right? And essentially what happens is this all cancels out. So your stops and your small wins cancel out over time, maybe not each day. And then your runners are all profit. So this is how you set up a winning risk-reward model. This is how you set up good trading plans. And this is how you make money in the market. You keep your losses very small. You take a small win up front and let your runners go. And this all cancels out eventually over time. Sometimes you're way ahead on these and then you get a lot of small winners. Sometimes you're way behind. You get a lot of small losers. Remember, all of that cancels out. This is an overtime game, meaning it happens over time, not it happens after the time expires. And then you get, I don't know, we probably get 3 to 5 runners a week, just depending on the week. Some days we have 3 to 5 runners, and that's where your profit lies. At the start of last week, I think coming into Wednesday, we were down, I don't know, maybe $1, maybe 20, which is $2,500 overall. So $1 on our options contracts translates on 25 contracts to $2,500. So coming into Wednesday, we were down 2,500, and we ended up the week up about, I don't know, 2,500. So it was a $5,000 swing Wednesday, Thursday, and Friday, because that's how trading works. If you flip a coin, yes, it's 50-50, but you don't get heads one time and tails the next. You could get heads 20 times in a row. You could lose 20 trades in a row. It doesn't happen often, but it could. November, we saw a lot of losing streaks. It sucked. But then you get a lot of wins in a row. In a row. January, almost everything won. We had a $15,000 month. So if you understand all of those things, and then you have an edge, and the indicator is your edge. It tells you when and where and how to get into the market. If you have all that and you have an edge, you apply that edge relentlessly. Every single chance you can, which is when the indicator tells you to. And then over time, you have a 70K edge in 18 months. That's an incredibly impressive number. And I'm not tooting my own horn. I'm impressed by what happened. We were looking for, we thought 30% would be amazing. We've more than doubled that. Um, and over a yearly time, last year we were up 35.4% on a 100K account. So we were around 30%, and it is amazing. If you can find that kind of return, by all means do. Um, and this year through 6 months, we're up 35%. So we've improved the indicator. It's gotten better. It's getting better. We're continuing to improve it. So that's where we're at on all of that. Okay, I've rambled long enough. We got to go through some counts real quick. We only have 6 minutes to the open. So came down, tested this low. I said last night, the last thing I said on my closing call was, do not be surprised if they bounce a little bit today. This is very big support. They came right down to it, spiked it, and now they bounced back up toward this big resistance area, which is going to be up towards, from where we are now, 6,300, 6,310. And then we would look for them to hold and push back down on that. If they break back above 63.10, that's a bad sign for the bears. Very likely they're going to come back up and test this. And given that they pushed the way they did, if they come back up to test this, they're probably going to break out to 6,400. There's a huge, huge call wall at 6,300 on the SPX. So remember, that's the SPX. So we're right now, before the market opens, at 62.43, plus the 15 is 62.58. So about 40 points higher than we are now. Huge call wall. For the SPY, our big levels are 625, 626. I mean, it's very stacked up today. High volume levels all through this 621 to 624 area. Your put supports at 620. Your 1 day minimum all the way down at 616. This is notable because yesterday it was at 618 or 619 was the 1 day minimum, so it's dropped 30 points. The 1 day max is up here at 628, which is the previous highs. So keep all of that in mind as you are trading today. Those red and blue lines are your key levels. It's not always stacked up like this. Very often there's big space in between them. So today could be somewhat choppy overall. Something to keep an eye on there. NQ barely green. Yesterday it had bench pressed the market. What's NVIDIA doing today? NVIDIA is up a little bit. SMH is down decent. So that's why NASDAQ is struggling. Let's see what the mag said. Well, we're not open yet. But at any rate, we can go through them. Do we have time? Yeah, we have time. Let's see. NVIDIA's up a little. Meta up a little. Microsoft flat. Netflix flat. Oh no, sorry. Netflix up a little. Basically flat though. Amazon basically flat. NASDAQ, Tesla up a little. Actually, Tesla's doing okay. Apple up a little. So you have a mixed bag here in the Mag 7. Google up a little. Mostly green, but the green is pretty flat. Like there's not a, like yesterday you had NVIDIA up like 5%. You don't have any of that. So far today, you're not getting any huge opens. Right now we do have a sell signal. So what we'd like to see is a spike up, because we don't take this sell at the open. We need a new signal. So we'd like to see a quick spike here at the open with some volume that will give us a sell stop, and then get us a bar off this high volume level that's a sell, come back down, test this area here at 622. You can see there's a lot of support right there. And then see what happens there. Morning, Jacob. Why did you recently add the Bollinger Band indication? I'm not sure what you mean, Canadian cents. I don't have the Bollinger Band indicator on my chart. I have Mentor Q. I don't have Bollinger Bands though. Watching on mute today due to a work meeting. Hopefully Mr. Rooster giving his best effort today. Strangers, join the Discord. Thanks, Jack. Join the Discord. I agree. It's a great community. Lots of very, very talented people in there, as well as PT and myself. I'm so confused. Hold on. crossover, cross under. I'm just making sure I didn't, nothing happened to my indicator because Canadian Sense is telling me that there's a Bollinger Band, but there is not. So I'm not sure what you mean by that. You'd have to send me an email with a screenshot, or if you can try to explain it in the chat, I'll go through it. But I'm not sure what you mean. There's no Bollinger Bands, or however you say it, uh, in here. All right, we are open. Let's see how we do today. Again, right now, we are in a pre-market sell. Even though the market's moving higher, the sell signal still stands until you see a sell stop, right? Like right here. See this SS? So what we want to see is an SS, because if they press down from here, you're not going to get a new sell signal. It's already issued a sell. It's already said there's weakness, and it hasn't stopped itself out. So it's not going to give you another sell signal. That doesn't make any sense. It's not just going to be like, keep selling. Okay, there's our sell stop. That's good. Now we need this 5 minutes to hold, because it's got to meet the requirements and close the candle. So you'll see it flash on and off. You'll see this with buys and sells as well. So we'll see how they handle here. The 625 levels where I'd really like to see them come up to and fail, because that's the call wall. That's heavy resistance over here. They sold down hard off of it yesterday. So that's really going to be our key target area that we'll look to sell off of if we can get there. I mean, we'll take the sell signal wherever it comes if we get one, because right now, again, we already have one. So if they sell directly down from here, unfortunately, we miss the move. And that's just part of trading. You're going to miss moves. You can't catch every move, and if you're trying to catch every move, again, you're going to go broke. This is not a get-rich-quick game. We don't play it that way. That's not how it works. I got into this to be an honest trader, to be a person who shows you how professional traders trade, teaches you how we trade, gives you the information about the trades, and hopefully gives you the tools to do it on your own. I'm one of the few that gives you enough tools, or tries to, so that you'll send me an email and say, oh my gosh, I had so much fun in your room, which I have several of these emails. I had so much fun in your room. I've now been able to trade on my own, and I'm ready to move on, and they cancel their subscription, which is great. I mean, obviously from a business standpoint, you want to keep people around, and the community is amazing, but from a personal standpoint, that's the whole reason I do this. You know, any boss that's out there, if you're a boss, you should want every employee below you to be as good or better than you, because that makes your job so much easier, and then somebody has to replace you so you can move up. A little different here because I'm not trying to move up, I'm just trading. But that's the whole goal, is I want you guys to be as good or better than me, so that you can live amazing lives and trade for a living, and have extra money and retirements and vacations and do what you want to do. All of that is real if you sell it correctly and you're not wrapping it up into you'll be a millionaire overnight and bullshit. But if you just stay the course and treat this like a job and use the indicator properly, you will do so well and be so excited about where you're at that it'll make a lot more things easier. So far they've rejected the pre-market high and the high volume level. Back testing the VWAP in 21 here. This area is also a heavy selling area. So the initial sell happened higher, but then they bounced right here, sold strongly off of this area, bounced slightly, and then sold strongly off the area we're at right now, basically, if you draw a line over, and then sold strongly into the overnights off of this area. So these two areas, 625 basically, 624.75 is the area here, and then this area we're at right now, 623.76, are very high volume levels that sold. So the bulls should have trouble with one or both of these levels. You can see they're having trouble now. There's a little bit of selling back to test VWAP in the 21. There's a little bit of a spike up. There's a battle happening right here because this is a high volume level. So when we're not trading, I do try to teach. Hopefully you guys get something out of that and show you why levels are what they are, why they're where they are, how they work, how price action works. So hopefully you guys get something out of this, even if we don't get a bunch of trades. Sorry, it's VWAP up. Oh, okay. So it's not the Bollinger Bands, it's VWAP upper and lower. Got it. Canadian cents. Yeah, sometimes when I turn on VWAP, it resets itself. I don't usually have the upper and lower bands on there, but sometimes that does happen, especially on other charts, not the SPY. So there are two types of weakness in the market. There is reversal weakness, where you get a sell signal and it does this. And then there's time weakness, where you get a sell signal and it does this. And then continues the trend. So we'll see what we get here if they continue to push down. Obviously, it's a reversal weakness. If they go sideways, it's a time weakness. And it just needs to consolidate. Same thing happens at the bottom. You get a buy reversal that goes like this, or you get a buy reversal that does this and then continues. Currently, this is a time sell. NASDAQ is a little more red. We said it was weak at the open. Let's see where we're at on NASDAQ. Yeah, NASDAQ is negative. ES is green. We'd love NASDAQ to lead to the downside. Selfishly, we do have a swing short right now that we're working on. Basically off of this level, so we're back to about where we started. It's a 624 strike. And it's just one. We're not trying to get rich on this swing short. We were trying to catch a drop to about 6,200 and then look for a long, honestly. But we always treat our trades, the same way. We take a small win up front, let them run until they break support or stop us out for a profit, and then go from there. So longer term swings come from the weekly chart. Shorter term swings come from my trading experience and what we're looking for and the setups that we have. We don't always, just because we have a buy on the weekly chart, which we do, doesn't mean the market's going up every day or every week. The market doesn't move in straight lines, so there are spots where the risk reward is really good. There's a huge call wall at 6,300, which is about 40 points higher, and we're looking for about 100 points lower on the ES. So the risk reward's really good here. It's about 3 to 1, 2.5 to 1. While we're waiting for the market to make a decision here on what we're going to do, any questions from anybody? I rambled there for about 30 minutes, so I get it if you wanted to wait for your questions till I shut up. Make sure, guys, if you like what you're hearing, you're learning anything today, you do hit that like button. It helps me a lot spread the word and grow my business, which I like to do. And, it's a fair trade, in my opinion, for you to just click a button and me to give you free information that hopefully is resonating with you. If it's not resonating, I get it. You don't have to like the video, but it sure does help, and I sure do appreciate it. So make sure you hit that if you're getting anything out of this, or you just like hearing me talk, which I probably didn't get any likes for that. So right now, NASDAQ is going to be a problem for us getting any kind of signal unless it's going to be a buy signal after a little bit of time here. It is much weaker than the ES. The ES is essentially flat on the open here. and the NASDAQ is not. So if we go over, so we're not going to get a signal. So we'll go to the NASDAQ real quick, and you can see that the first bar of the NASDAQ was straight down, broke through the 21, and now you're getting this green bar here. But the open on the NASDAQ way up here, they're climbing back toward it. The ES, the open, and the green bar are even. So you can see a very different chart here. And this is one of the beauties of the indicator, is that when these charts are going in different directions like they are currently, that leads to chop until they sync up. So NASDAQ tends to lead, so I'm thinking down is probably the way ultimately, unless, if the NASDAQ, so the NASDAQ does two things, sorry. The NASDAQ leads if we're going to trend and go in most cases, or if the ES is leading, usually on the first kind of setback, the NASDAQ will catch up and outrun it. So ultimately, the NASDAQ will lead in whatever direction we go in most cases, because tech is what drives the American market. And there's so much overlap between ES and NASDAQ. So when the NASDAQ is weak and the ES is showing green or strong, you're not going to get any signals because they're going in opposite directions. And so what happens is you may say, oh, what a great opportunity to get long here because we backtested VWAP, held, and now I want to see us explode higher. Well, what you're not seeing, because you don't look at 100 charts or can't compute everything, is that the NASDAQ is struggling and is down, 0.1% or 0.15%. So you're not going to get that hold and go here without the NASDAQ participating, and the indicator knows that, so you're not getting caught up in this chop for any kind of signal. In fact, it sees weakness because it knows that the NASDAQ leads and the NASDAQ is weak. And so until that catches up and reverses, you are stuck waiting for them to sync back up. And right now, the ES is trying to sync back up with the NASDAQ and sell down. ADD quite positive today. We're not even one. I keep it on the 15-minute bars on the ADD, and it's started very positive, about 1300, but is going down. And it's the start of the day. The start of the day, when you have a gap up, which we had a small gap up, when you have a gap up, you're going to see a positive ADD, and usually a fairly positive one. And when you have a gap down, you're going to see a negative one, and then the day sorts itself out. So I wouldn't worry too much about where the ADD is right now. I'd worry about where it's heading. Are you going to add a trend day indicator in the system? No. Well, I mean, we're working on trying to filter that, but it's really hard to do because um, the way PineScript works is, and I'm not the expert on this, so don't put me on the cross for this. It's really hard for it to understand that it's only supposed to take a value sometimes. So when we're looking at key levels plus volume plus X plus Y plus Z, what happens more often than not is levels hold. That's how trading works, right? You come down to, so the pre-market low more often than not is going to hold. The pre-market high more often than not is going to hold. So you come down and hit this, oops, I don't want text. Take that off the screen. You come down and hit this level, assuming the conditions are right, and you bounce, which even on trend days, you're likely to bounce a key level a little bit. So once the conditions are right and you get the right setup here, it's going to issue a long, a buy signal. And if it's trend day, it's not going to hold this support. It's going to come back down and break through. That doesn't mean that the trade was bad. It was off of a key level and conditions were met. But the indicator can't understand that, hey, this level is okay, but this level isn't, even though it's a key level. I hope that makes sense. So you have to have some human intervention in assessing what we're looking for, because the indicator calculates probabilities, and probabilities tell you that key levels will hold more than they won't. So when you get any kind of weakness off of a key level, it's looking to play that move, because very often you see this. And it understands that the value of this happens more often than the value of this. So it's willing to say, hey, it's okay that we fail down, because more often than not, we're going to rip up. Right? So what we have to do is we have to use our brain, and that's the only time you really have to use your brain, and say, okay, they broke the pre-market low. So if this line, if the VWAP line here was the pre-market low, we broke the pre-market low, we back tested it, then we broke this low, that means we're very likely in a trend down, and all buys will be ignored. So some people don't like to short the market, and that's fair, I get it. Some people love to short the market, also get that. But what this can do, if you don't like to short the market, is you get a, let's say you get a buy signal, and you see this sell right here, you can exit your long, and then you would have dodged this drop. That's not a big drop, but still a drop that costs you money for day trading. We're talking about day trading. We're not talking about, obviously, buy and hold. We don't care about 10 cents on a buy and hold. But, this has some weakness to it. So you can use it that way. There's a lot of different ways to use it that aren't exactly the way I use it. My particular comment on that is you are probably not a professional trader if you're on here looking for help. And you should use it exactly how it's designed, because you're not a professional trader, and putting your 2 cents into something that you aren't an expert on is a terrible idea. One thing I have tried to learn, and I haven't because I just like to talk and I'm confident in myself and what I know, is that when dealing with an expert in a subject, it's extremely helpful to just listen and not challenge them a lot. You can ask questions, don't get me wrong. Ask questions, learn. Don't impose intended bias in your questions or in your thought. If the guy's an expert, there's a reason. Doesn't mean that he's all powerful and knows everything. But if he's an expert and you're not, I would defer to that person. I've gotten caught many times thinking I knew something and finding out that I knew nothing, and feeling really humbled and embarrassed that I was so arrogant. So my overall thought is, if you're going to use a tool that somebody built who's an expert in this field, use it the way it's intended to be used, and you'll be very happy with it. It's like buying a car. You buy a car, and then you drive it 150 miles an hour down the road, and you don't ever change the oil, and then you wonder why your engine breaks down. And then you blame the car and say it's a terrible make and model of car. Well, maybe, or it could just be the driver. If they moved all-time highs from here and it's not an expanded B wave, would you call the move down yesterday 3 waves instead of 5? No, not necessarily. It can still be a C wave and a running flat. So running flat, you make a low, and then you have, so A is your low, and then you have a B wave that comes up to or over the previous high. And then your C wave comes down and does not eclipse A. This is a running flat. And then they start 5 up. So this can be a C wave that was 5 down, and then we just start the next move higher into all-time highs. I noticed the VWAP is noticeably on the SPY versus ES. I don't know what that means. Any one of the two has more weight. I assume you mean noticeably different. Any one of the two have more weight on the market. Which one has more chance to support typically? Honestly, that's a it depends question. They both are going to provide support. So a lot of times you'll see them come into, let's go over to the S real quick. Where's VWAP on the ES? Okay. And you got to remember that ES VWAP is going to be different because it has the entire overnight session, whereas the SPY doesn't. It has overnight trading, but it doesn't have the overnight session. But you saw VWAP bounce a little bit here. So they bounced it here, they bounced it here, and now they've broken through. So you had two bounces off of it. So it held support on VWAP initially and then failed. And now we're coming into the ES VWAP, which is down here, which will provide some support. But it's support that will likely provide like a kind of a V, like this, and then down. We're now seeing a failed breakout again. So they tried to break out to the upside here at the open. They failed. They've broken back through the 21 in VWAP. So now it becomes pretty likely we come down and test 620.90, which is the pre-market low. Let me see if that's the real pre-market low. Hold on. Slightly lower. 620.46 is the real pre-market low. But it's very likely we test that number because of the breakdown. Breakout failure. Oh my gosh. Because we failed to break out, very often when that happens, you come back to the pre-market low and possibly lower. Again, notably, the one-day minimum has dropped all the way down to 616. So there is a chance they could try to break down here, but 620 would be a valid target here. 620.90. Now, another trading point here, since we aren't going to get a trade until we get a buy signal, which ES not quite there yet. Just because 620.90 is likely to hit doesn't mean we hold our whole position until then. This is a high volume level at 621, 622. They can hold this level. So if you are short here, you would want to take some profit at this level. Because they're likely to do this. They're already trying to do it. They're likely to do at least this, and they may do this. So you don't want this really nice trade to bounce up and take all of your money. You want to capture some at what could be the absolute bottom. If they bounce and continue, cool, you have runners down to here and you take profit here. If they bounce and continue, cool, you have runners that keep going. You just keep taking money off at key levels. And you should almost never get to your target, your full target with your full stack. In other words, if you have 25 contracts, you should never get to your ultimate target with 25 contracts. If you are, you better have a very, very solid risk reward setup because you're going to lose a lot of those trades. Just because I said they should get to the 620.90 area doesn't mean they will. And we always protect our capital. Always. Dispersion trade going on. I believe today is VIX expiration, which means unwinding begins. Yeah. Hi, Jacob. Have you tried any of the AI agents? For different things, not necessarily for trading. I mean, our algorithm uses some AI in it already. A lot of the calculations draw on our AI, but in a general sense, no. So NQ breaking some decent support here. It's down, over 0.25% now, moving straight down. You can see it's much weaker than ES. Again, NQ tends to lead. 22,929 going to be a very key support area for NQ as it moves down here. So keep an eye on that. Unfortunately, because of the pre-market volume setups and stuff, the indicator was spot on in the pre-market that had the sell signal right before the open. We don't take those trades because, you know, they just aren't reliable enough. But spot on this sell right before the open from the indicator. So you can at least see the power of it, even though we didn't get the trade because it was in the pre-market. All right, so if we don't get too big of a buying bar here, ES has now moved into full sell. That can change still, especially if they bounce and go here. But my point being in that is that we would be eligible for a buy signal. And remember, we're always looking opposite. So we got a sell signal up here. So the next signal that we're looking for is going to be either a buy or a sell stop, right? So they entered a sell here, they stopped you out over here. So as they continue up, the next signal we're going to look for after a sell stop is another sell. But if they go deep enough and complete the cycle, then we're looking for a buy. So right now we should be set up for a buy. If an SS would appear right here, a sell stop or a short stop, whatever you want to call it, Ozzie Newsome or Ozzie Smith, okay, if that's the case, then we're looking for a sell again. But since we didn't get that, we are currently getting ready to look for a buy, especially if they can hold this down a little bit into this key level. This is yesterday's close, yesterday's low. Today's low so far is right on top of that. So there's a lot of support here. It's also a high volume level at 622. Breaking yesterday's close. The low being 621.80. Breaking that, and we're definitely coming down to 620.90. We are okay. So real quick here, we are seeing our first signs of weakness in the SPY. So it builds, right? It has to start somewhere, and all weakness starts on the 1 minute chart in either direction. I guess the 1 second chart, but for all intents and purposes, the 1 minute chart. Then it builds up to the 5 minute chart, and if it continues, it will build up to the hourly, and then the 4 hour, and then the daily, and then we use the weekly for bigger swings. Well, yesterday on the daily, we don't use the daily for our swings. You can, but we don't. Yesterday on the daily, you got a sell signal. And they're pressing on the bottom of this daily close. So again, breaking through that opens the door to the downside quite a bit. And we could see 6,200 come pretty quickly. I mean, today we're probably looking at another 20 points of downside total on this SPX/ES because of where the 1 day minimum is. But in general, we are, oh no, 616, sorry, so that's 60 points of downside. Yeah, that's about right, 62. So it could happen pretty quick, the downside. Sorry, I was thinking of yesterday's 1 day minimum, not today's. Should they fail to the downside, it can happen pretty quick that we achieve 616.50, which is about 60 points lower than we are now, which would put us right at that 62.20 area, which is exactly where I said we would target. Funny that the options contracts lined up that way today. So keep those things in mind. We could start, if they break the pre-market low, we could start to Clifford, especially if we get down below 690 or 620. These live streams have helped me understand the indicator so much more. Thanks. You're very welcome. I want you guys to understand it and use it and be successful with it, so I'm really glad it helps you. That makes me happy. Is there a way to have the indicator to refresh the signal so that you do not get a sell pre-market. It can reconfirm the strength of the move. No is the answer. The short answer is no. The long answer is maybe. Um, both of those are pretty short answers. I understand what you're saying. The the logic is the logic. When it hits X threshold, it issues a buy or sell. I'm not sure that you can configure that to change because things like the ES and the NASDAQ and the RTY don't truly have pre and post market. I know that there's regular trading hours for everything. I get that. But there's no real change. They're just closed for an hour. So I don't know the answer to that, honestly. Um, I suspect if you're smart enough, probably. I don't know that me. Maybe my coder's smart enough. He's a pretty smart guy, so maybe he is. Mostly though, you're gonna miss. You're just gonna miss moves. That's just part of it. The best traders in the world get caught off sides, get caught off guard, or the market moves um, off of a not key level. So a lot of times, what you'll see, I call it ants marching, right? So the news is just chaos. All the news is chaos. It's not a driver of the market. Get that out of your head. It is, in fact, a catalyst of the market. So it will move the market. Obviously, we see Fed days and stuff move a lot. However, what the news says is what doesn't matter. Everybody thinks that I think that the news doesn't move the market. Clearly, it does. I'm not an idiot. What I mean is, inflation's high and the market goes up, or unemployment. Look at COVID. Coming off of the 2020 lows, we hit exact support and bounced from a technical analysis, price action, trading plan, EW, Elliott wave, all of it. The news at that time was businesses must shut down, stay in your house for indefinite periods of time, unemployment skyrocketing, inflation skyrocketing, businesses shutting down left and right because they can't afford to stay open the way it's working, the government hemorrhaging money, unknown length of time of the vaccine. The market comes up with one of the greatest rallies in the history of time, back to all-time highs. That's what I'm talking about. The most devastating news globally of my lifetime was happening. Pretty sure it's for a global thing. So all markets, all people, all things being destroyed, and the markets rally incredibly. So you can't tell me that the news matters. On the way down on the COVID fall, the Fed stepped in 3 different times to try to stop the market by lowering rates, by QE, all the different things. Limit down, limit down, limit down, all 3 times. They came in with positive news, and the market gave you the hardest move down it could. When the negative news started piling up, the market rallied as hard as it could. So stop reading headlines and thinking they matter. When Russia invaded Ukraine, the market rallied. When Israel launched at Iran and America attacked Iran, the market rallied. Good news isn't good news, bad news isn't bad news, it's just a catalyst. So I call it ants marching for this reason. It causes chaos. If you look at ants marching in a line, you have this little line of ants going to their target, they go to the sugar, and then they come back to the hive, right? If you put a stick in this line, the ants are going to go crazy. They're going to go all over the place and scatter. But if you come back 5 minutes later, they have moved themselves right back into the line to the sugar and right back to the hive. So the news causes this chaotic event that causes the market to move, and then the market goes right back to doing what it was going to already do. It was already going to this target over here. It's still going to get there. You're just going to have a lot of chaos in between because of some catalyst that threw it out of whack for a minute. That's all. So you're going to, sorry, the point of that is, I was like, why did I get to that? My brain works weird. The point of that is you're going to miss moves because you come down and then at a random level, somewhere here, the news comes in, and for whatever reason, the market decides it wants to do this. You missed that move. It was maybe a 5-point move, and then the market resumes its downtrend. Right? So you're just going to miss moves. Yes, we want the indicator to be as perfect as possible, and yes, I will look into improving it. That'll be a suggestion. I send them emails about once a week of different things that people either ask or I come up with or whatever. So that'll go on the question list. I think it's a fair question, but understand you're just going to miss moves. It's just part of trading. Good afternoon, Cass at home, Super Dave, Signal Goose, everybody, welcome to the stream. Alejandro, you have a whole song about you. Would we take some profit on our swing if they fail to 616 today? I have a few meetings today and I want to be ready to close some of so. To be quite honest, depending on what price is around the pre-market low, I'll probably take some there. And then if they come on down to 616, I would probably take some there as well. So just so everybody is aware, as of right now, we are looking for a buy. However, if they break the pre-market low, we'll have to see exactly how things go. But we are looking for a buy currently. I'd love it to be off. 620 would be an okay level. 620.90 would be a good level. NASDAQ continuing to fall. It should be right at its pre-market low right now. So the NASDAQ may be getting ready to break its pre-market low, which is interesting. It's also doing it in a 5-wave move. Just at a glance, I'm calling this 5 waves. I haven't measured it or anything, but you have essentially 1, 2, 3, 4, 5. It certainly could use a 4-5 here into the pre-market low, but it's coming into that 22.929 area, so be careful with that. We'll see if ES can catch up or if it's going to drive down through it to bring ES in. Its put support is down here at 22.9. Its 1-day minimum is at 22.8, and that is big support. So 22.8, huge support, which is why it's the 1-day minimum. Keep that in mind currently. Currently looking at a strike at 622 or 623, just depending on when or if we get the buy signal. We're getting a little bit of a potential reversal bar on the 5-minute chart. On okay volume, it's not great. That can just be a reversal bar that backtests VWAP and the 21 and then continues. But a little bit of a reversal bar, not a great one, but one that definitely gives you a little bit of a tail candle down here, and then didn't quite hammer. You wanted it to turn green. They still got 15 seconds. You'd like it to turn green if you want it to be a reversal bar. They did close the gap on the ES, or the SPY, I should say. So we got to keep that in mind. We're getting a gap close bounce right here. Spotted Owl says, LOL at the rooster. Yeah, that thing puts in work. It never shuts up. It's dawn for 24 hours here. Well, that's not exactly true. He shuts up at night, but man, as soon as that sun comes up, he's ready to rip, and he's got a vocal cord that won't quit. Let me guess, run up to the 21 incoming, and then again stiff arm back to the. Oh, I think he meant neck there. Okay. Right up to the 21 and stiff arm to the neck. Yeah, 21's pretty good. 21 and VWAP are very strong resistance levels and support levels, depending on which way you're going. I believe ES held its VWAP, honestly. That should have been right on. Oh, no, it was below it. Sorry. Now it's testing VWAP in the 21 on ES. For some reason, I was thinking this was lower. At any rate, they're back testing VWAP in the 21 on ES. The 21 here going to coincide with VWAP in the 21 on the SPY. So keep that in mind. That this should be the 6290 area should be fairly strong. We're seeing red here. SMH taking a nosedive. 1.5%. Well, nosedive's a little strong, but 1.5% here. NASDAQ showing some strength to the upside, so we should be looking for a buy signal here pretty soon. Coming off of this zone here, though, is going to be very, very strong resistance. Meta, red. Microsoft, red. Netflix, red. Nvidia, red. The Mag 7 is, at least on the top half, red. Amazon, red. Tesla doing well. Apple doing very well. Google doing well. So you got a mixed bag here, which is chop generally, which is why we're seeing chop today. I mean, the market was up and now moving down. But if you look at the bigger picture, this is move up, slowly chopping, now move down, unable to find direction. That's what happens when you have mixed Mag 7 or a mixed market. The ADD is falling. It is down to 440 positive now. It was at 1300. So that is in line with a move down. The Volt is slightly positive, but sideways, so it's not like it's increasing the buying. By the way, right to the 21, stiff arm to the neck, as my man said. JR, welcome to the stream. Otis, is this a summer movement? Summer is always lackadaisical. You got to remember that summer is generally lower volume. You have lots of people who take vacations in the summer, school's out, so people are traveling. So lots of the bigger traders and things aren't necessarily in the market. Although, from a general sense, retail is in the market more than it's ever been in history. That's a scary thought because that means people are now in euphoric phase. And the euphoric phase of the market is usually a blow off top, which we've kind of gotten. I'd still like them to hit 6,400, but we've gotten a pretty stout move off of that last low in April. It's the third fastest back to all-time highs, which is incredible. So that one was kind of an anomaly. And that's where people get mad at Elliott Wave because they're like, see, it didn't work. Yeah, I mean, it's the third fastest in history. It's like saying I ran against Carl Lewis because he's probably about third or fourth fastest in history running. Usain Bolt, I'm assuming, was the fastest still. And saying I can't beat Carl Lewis, or I was supposed to run against a bunch of fat guys, but Carl Lewis was in the race. Well, yeah, Carl Lewis is going to smoke you, and it didn't go how you thought. You were supposed to beat the fat guys, but instead you got smoked. So it's an anomaly. You had a bad draw. You had a random move up that doesn't happen very often, and we just play probabilities. So if it's the third fastest in history, it doesn't happen that often, which means the probability was we were going to get a pullback in there somewhere. We didn't. It skyrocketed up to the highs. However, when you get that kind of run, you typically get a fall that comes with it. I'm not fat, I'm big boned. Yeah, me too. Me too. Question: the daily call is included in Jacob plus PT's throne room, right? What time is the call? I am in Europe. Yes. So anything that is in my room is also in PT's room. You get everything in my room, plus PT gives you individual stocks. He gives you futures trading, some different, more advanced trading styles that are really cool, like his income trading. All of that stuff's great. Everybody gets the daily call. That's for anybody who's joined the service. It's at 10 a.m. my time, which is Pacific Standard Time. It's 1 p.m. Eastern Time. I have no idea what it is in Europe, honestly. The tricky thing is that they now call every little pullback a crash. Yeah, I mean, you got bear porn people out there who, if the market's down 1%, that's the end of the market and all that kind of stuff. That's nonsense. Until support breaks, it's a bull market, and that's a fact, and that won't change. So the market has upside, plenty left. It can go to 6,400 plus. I don't think the people calling for 7,000 plus are going to see that ever. Maybe not ever, but in this run, I don't think that's in the cards. But anything is possible in the market. Literally anything, which is why I like Elliott Wave, because it takes the literally anything and narrows it down to a few scenarios that are the most likely scenarios, and then you apply price action and key levels to that, and that's how you become a really strong trader. Elliott Wave isn't some be-all, end-all, amazing, oh my god, we figured out the market system. It's very interpretive. It's an art form as well as a science, and there are a lot of times that the market doesn't deliver exactly what you want to see, so you're in a guessing mode. And it's not guessing, it's a calculated hypothesis. It's a calculated guess. It's not just like, oh, it could be up or down. there's key levels involved. There are levels that must hold or break to keep the thesis in order. But it is a great tool for that because of how you can apply the key levels and understand where the market is heading. People act like if you use Elliott Wave that you only use that and you trade off of every signal that Elliott Wave gives us. Okay, we just got to buy signals. We got to take that, guys. Sorry, we're going to go 623. We got 85 cents here. So we're going to keep it cheap. Our stop is going to be 622.15. We'll see if the bulls have any juice in the tank to take us back higher. I'm skeptical, to be quite honest with you, just given the overall structure today. They retraced and now are starting to push down. A little bit of a bounce back to the 623 area might be okay, but this is going to be a stiff resistance zone overall. So we'll see exactly how this plays out. But this is not my favorite place to enter, right below the VWAP in 21. But we have tested it once, come back to it, so we'll see if they can push it all. Again, usually when I say things like that, we have a winning trade because the indicator is calculating everything and I'm just seeing one chart. The indicator is smarter than me, so I just follow it because everything that I used to try to do on 4 charts on my screen and look everywhere and get into trades late, because by the time I figured it all out, the market had moved 20 cents, which is a lot in day trading. The indicator gives it to you immediately. Doesn't mean it's always right, but it gives it to you immediately. So at first glance, I would say that part of the calculation, well, I know part of the calculation, is that they spiked the gap fill, right? So they came down, yesterday's close is right here, they sat on it, spiked it and failed, came back, tested, higher low, came back up here again, thus issuing the buy, looking for the breakout, up over this line. So you got this low, spike down, back to the 21 in VWAP, higher low, and looking for a breakout now. So at 85 cents, 17 cents is our 20%, and that would be $1.02. So we're not looking for a huge win up front. We're looking for a 20% win on our money. And the reason for that is that cancels out a lot of our stop losses. Then, if they continue past that, we're kind of booking profits at that point. Also, if you look to the left, another calculation I'm sure that was taken in here. Huge support wall right here. So they came up and hit it, failed, hit it, failed, hit it, failed, broke out above it, coming back to back test it, spiked it, came back up, tested it, and now looking to push back up. Is D-A-N-K-E, is that Danke, like Dankeschön? Which I believe is thank you. It is. Perfect. Thanks, Wayne Newton. I learned a new language. Could you go over the trade parameters you use, stop and take profit? Yeah, so the stop is 50 cents below price. So when we got in, it was 622.65. So our stop is 622.15. And this is for a buy signal, right? So it's 50 cents below price for a buy is our stop, 50 cents above price for our sell, for our 50 cents above price for our sell alerts. So that's our stop is 50 cents below SPY price. So 622.65 minus 50 is 622.15. If they get down there, we stop out, we go to the next trade. No big deal. Profit taking, I think I went through a couple times, but I'll do it again. 20% we take. So the option price is 85 cents, meaning that for every contract, you're spending $85 because a contract is 100 shares or control of 100 shares. So you control 100 shares, so 85 cents times 100 is $85. So for every contract you buy, it's $85. We are looking to take 20% gain up front, so essentially $102 or $17 of profit, because 85 cents or $85, if you take 850 times 2, that's $17. That's your 20%. After that, we start to look at things like the pre-market high as a profit-taking area. And then we would look at 625 after that, and then so on. So that's how we kind of set up our trades for our risk reward to work properly, because we're going to probably lose this one and we're going to lose trades. I mean, I was skeptical of this one just based on the overall structure. Again, the indicator's smarter than me, knows more than I do, so I don't worry too much about it. And one trade doesn't matter. One day doesn't matter. 1 week doesn't matter. 1 month doesn't matter. This is a long-term game, and that long-term game, if played consistently, as I've shown you the results, provides winning trades and winning outcomes. Not trades, outcomes. That's what I should say, because it's going to provide winning and losing trades. That's just how trading goes. But the outcome overall will be a winning outcome. And that's not, that's over 18 months of time since the indicator's been on the market for 18 months. So this is, and I was using it before that successfully. So for me, it's about 2.5 years of time. But I wanted a year under my belt of using it and seeing success before I, gave it to people, because I didn't want to put out a shitty product. And that, that's just who I am. So those are the parameters, and if followed properly and used properly, you'll have winning outcomes. That being said, 30% off your first month. That is only active during the live stream, guys. So when I decide to cut it off today, I don't know when that's going to be, but when I decide to cut it off today, that code will go away and it'll be back to regular price. So if you want to try it out, it's a 30-day money-back guarantee. Go ahead and get it. You get it cheaper, so you can test it out cheaper, and then if you keep it, you save some money. If you don't keep it, you get that money back anyway. So you might as well take advantage of the deal. And if you get the yearly, you still get that 30-day money-back guarantee, and you get free the Elliott Wave for Beginners and Elliott Wave Advanced course. And even if you don't like the yearly indicator, those are yours just to keep. So incredible deals. Those courses are gold. At least I think they are. I wrote them, but I have tons of feedback saying they are as well. I've been told by many people that they've taken many EW courses and it's the best one they've taken. That's not my words. So anyway, that's what's going on today. We are live trading, and yeah, welcome to the stream, everybody. So I can't cover every little detail in those videos for the training of the indicator. One thing I don't really go over is like trade sizing. I think I might go over it a little bit, but not in depth. So since we have a minute here, you should only be using 1 to 5% of your capital. So, on a given trade. Now, is it okay if on Thursday it's Fed day, so there's elevated options, pricing, premiums, and it might be 6% that one day? Yeah, that's fine. I mean, obviously, if it's every day, for instance, in April when volatility was through the roof and some options prices were $7, I went all the way down to 10 contracts. I typically trade 25. I went all the way down to 10 contracts because options prices were so high. And we still did good in April. We made money. So you have to adjust to your environment. Bigger stacks can trade more contracts. Bigger bankrolls can trade more contracts. Bigger capital. But the overall theme is that you need to be trading 1 to 5% of your capital on any given trade. And the reason for that is it allows you to stay in the game. You know, there's going to be losing streaks. The reason people say that is because all the professional traders in the world know that there are losing streaks. They don't say that to cap you or make you not, to keep you poor or to make you feel bad or anything else. They're trying to help you. All right, there we go. Here's a breakout. Let's see if we can get to that $1.02 in cash. We're back to that high volume level. We got close. Get back above the high volume level. They're telling you that because that's how you stay in the game. You're gonna have bad runs. The market does weird things sometimes. The whole month of May was weird. You'd get a gap up, and you'd never get a reversal or a continuation. It would gap up, and then do this all day, and that's really hard to trade. So we had a lot of small losing trades, and we ended up with a small losing month. That happens. But if you were in for 20, 30, 40% of your stack, your capital, then you would feel that pain a lot more. But since you're only in for 1 to 5%, and usually I'm in about 2 to 4%, honestly, it doesn't hurt as bad. It's just, tough month. Move on. We lost $2,000 that month, and that is 2% we trade based on a $100,000 account. That is 2% you lost that month. We made 15% in January. We made 9% in March. We made, 35,000. We've made 35% this year. So a 2% down month is, nothing. It's the cost of doing business is what it is. So for this exact trade, we got in at 85 cents. Oh, hold on. Excuse me, we got in at 85 cents. That's $2,125, or roughly 2% of a $100,000 bankroll for 25 contracts. Most days, options premiums are between $1 and $2. So if they are at $2, times 2,500, that's your 5%. That's $5,000. You're going to be right at the top of your limit there. So trade sizing is really, really important in being a winning trader. The 21 EMA is putting on a clinic. Yeah, it's like Earl Campbell. It's just running over and stiff arming and I've been trading 3 years, and this beats me hands down. That's good, and I know 3 years seems like a long time, and I'm glad that it's helping you win, Otis. 3 years is a scratch on the surface in trading. Some people are smarter and get it faster, but a lot of people are still. I know I was still learning a lot my first 5 years of trading, but not because I was wanting to learn, because the market was teaching me lesson after lesson. It's because it was lighting my money on fire. After 5 years, I decided I didn't want to light money on fire anymore, so I actively started learning. And then in another 5 years after that, I stopped blowing up accounts after that first 5 years. And then after the next 5 years, I felt I got to a place where I was pretty confident. And then the next 10 years, I continued to learn and practice and get better. And you know, that's when you get to a point where you're very comfortable with a lot of things. You learn a lot of things, and repetition and practice and 10,000 hours of time, whatever the expert rule is, all of that stuff comes into play. And you start to learn, you should have anyway, learned quite a few lessons in that time. Hard lessons are sometimes the best lessons because they impact you with so much pain. Well, hopefully they can spike it up again. I think this spike to the key level here, this high volume level at 623, rejected strongly. And we missed our first take by a few pennies. That happens sometimes. Hopefully we can hold here and try to spike up one more time, but you know, it's not looking amazing in either direction yet. This is kind of consolidation with, you got a higher low, and some higher highs. But coming, yeah, there's the breakdown. Okay, so we stop out at 62 cents, guys. We almost got our winner. We were right there, a few pennies short. Sometimes that happens. Jacob, could you post an abbreviated version of one of your courses? What do you mean exactly, George? I'm not sure I follow. I mean, I could show you the courses if that's what you mean. You want to see what's in them? Or I guess I'm not exactly following. So there are two things that can derail you as a trader. Well, there's a lot of things that can derail you as a trader. Using the indicator, excuse me, there are two things that can derail you. One is trend days, which I have a video on. And the other is chop, which is in the day trade strategy video. We go over that. And chop, okay, so if you start to get chop like this and you're not getting any kind of movement, we implore the 3 strikes and you're out rule. So there can be days where the market is sitting on, say, resistance or support. So let's say it's sitting up here at resistance, and you get a sell signal and it fails, but it's not really going anywhere. And it comes back up and it's at resistance and you get a sell signal and it fails. It comes back up but it's not really going anywhere. You get a sell signal and it fails. And this is what happened a lot in May. Come up and so on. This just keeps going, right? Well, this can go on for a whole day, 2 days, 3 days, whatever. You can get 6, 7 sell signals up here that are all going to be terrible. So we implore the 3 strikes and you're out rule. So if we go 1, 2, 3, we fail all 3 times, we're done for the day. We're going to go take a walk, clear our mind, not chase, not revenge trade, not worry about it. It's just a bad day. Shit happens. If you kept going, you'd continue to lose. Now, is there a chance that it sells and does this and you miss a move? Absolutely. We've done that many times. But that is the lower probability outcome. And we're not chasing dreams, we're running a program. Okay, so just because you miss a move, guess what? The market's open again tomorrow and the next day, and then it's closed on Saturday, Sunday. But then it's open again the next day, and the next day, and the next day. There's always trades. There'll be another one. There'll be another time. There'll be another move. It's never going to be the last move. So that is one thing. Those are the 2 things we do to limit losses. One is on trend days. We don't trade against the trend. And 2, on chop days, we implore 3 strikes and you're out. So if we sit here the rest of the day, we're on support. We could easily chop sideways between these 2 high volume levels here, 623 and 622. If we do, and we get 2 more buy signals, and we fail, that will be the end of the day for me. I'm not here to lose a bunch of money in a choppy market. I'm here to find the trend and follow it, and the indicator gives us that the majority of the time. However, there are days that just suck. So those are all things that you have to have as a trader, is an understanding of what your weaknesses are. And the indicator has weaknesses because nothing is perfect, or we'd all be billionaires. So the weaknesses are trends and chop. It needs a little bit of movement. It doesn't need a lot of movement. Remember, we got in right here at 622.57, and we almost cashed at 623. So 43 cents, and we almost had a cash winning trade. It doesn't need a ton of movement, but it does need some movement. This is not movement. This is sideways chop. Okay? So just keep those things in mind. Sample? Yeah, hold on, George. I'll pull it up in just a second. We have a long stop here, so I do want to make sure we get the trade if it comes, but give me 1 second. JR says, by the way, I've been using the indicator since it was offered, using it full time as of this year, and it's been paying my monthly household expenses since. That right there is clip-worthy, JR. Thank you. What a cool thing. Man, that makes my whole day. I don't care if I lose every trade today. I had a good day because of that comment right there, which is going to be clipped. And used in the video. I hope you're not mad about that, but it's JR, so it's not your name. Nobody's going to know who you are. But I do really appreciate that comment. 1, selfishly, marketing. 2, it makes me really happy. I mean, that's the favorite part of my day. I know that I am fine trading. I know that I will make money trading. I've done it my whole life. Well, the whole second half of my life. And I know how to do it myself. But when other people get it, that light bulb goes off, and I give them something that does this, that's it. That's the whole point of my doing this. It isn't. I mean, I'm a businessman, and I'm a capitalist. I'm not an idiot. Money's awesome. I do this for money, sure. But the real reason I do it, the real reason, because I could do all this without it. 1, it's lonely to trade without talking to people. Just sitting here looking at your computer all day, it's boring. And 2, I love seeing people get it and then change their life and then just absolutely crush. That's an amazing comment. Thank you so much for that. It makes me so happy. So happy. He said, I got proof if anyone doubts it. That's awesome. That makes me happy, JR. Good for you. James, welcome to the stream. George, you want to sample? Well, we might get a buy here. Let me pull it up on another screen, and then I'll bring it over so I can do both. Uh-oh, that was a mistake. Okay, let's see if I can bring this in here real quick. Okay, George, so here's the Elliott Wave for Beginners course. If you come down, it's got your introduction area. So you go through your expectations, your mindset, the KISS method, and why this works. It goes through your chart setup. So we go through your whole chart setup. Everything that I use with Elliott Wave, why and how I use it. And then Elliott Wave for Beginners is the actual, all of the waves, how they work, how we measure them, the theory of alternation, the corrective depth theory, all of the basics of Elliott Wave. And then in the advanced course, okay, here, yeah, we don't have a trade. Oh, NASDAQ's not going to give us a trade anyway, so NASDAQ is still, has not issued a sell or a buy stop. Its bounce was a little better. If we go to our advanced course, the advanced course right here. Here you go through your advanced fib levels, your diagonals and how those work, your double and triple threes, triangles, and then trading Elliott Wave. This is the most important module of all of them, in my opinion. This is where the rubber meets the road. So everybody thinks that just because I come on YouTube with a free video and say, hey, you know, we should be topping in this area, we're looking for a pullback, everybody thinks that I'm short. I'm not. I'm looking for a pullback, and if I get a setup for a short, then I will take the short. And this tells you how to understand the setups and the risk reward, the 3 questions on how to trade, how to hedge, and our 401k strategy in there as well. So that's the advanced course. And then the other thing, guys, that I don't have on here, but if you got it, you would know. With the yearly indicator, if you do get the yearly, you also get half price on TradeWaves Academy. And TradeWaves Academy is everything that isn't Elliott Wave that we go through. So Elliott Wave is the advanced and the beginner's course. TradeWaves Academy is market psychology, capital management, options trading, candlestick patterns, price action, bull and bear traps, identifying reversals, fib levels and why they're important, identifying key support and resistance and trade setups and proper risk reward. And these are not Elliott Wave based, they are all price action based. These are all 2-hour videos. It was a live course that I did. It's an incredible course. You can get these, you can just, if you just want to know how to trade price action, you can just buy this module on the website. So if you come over to our membership plans down here under courses, you can get the whole TradeWaves Academy for half price if you get the yearly. So it's $250 basically. That's not exactly right, $248 and change. And then if you just want one module, you can come down here and it tells you what's in the module, and you can get it for $67 one time and you get it forever. So if you want to understand how the Greeks work and the options, if you want, first of all, it's options trading start to finish, and the Greeks are the very important thing in the options, and people explain them, but they explain them very complex. I had 2 different people tell me that this was the first time they understood them because of how it was done. So all of that is in there. There's tons and tons of valuable information on my website that you can get here. Everything that I use in trading has been broken down in one of these modules. So all of that is there. Hopefully that helped you, George. So this is a case where we may miss a move. We'll see. I mean, we don't know what's going to happen yet, but they move up. We get the buy signal. They stop us out, and then they may go from here on up. Now, they stopped us out on the SPY chart and the ES chart, but the NASDAQ did not stop out, so it's not going to issue a new buy here because the NASDAQ has already been in a buy, and all 3 have to hit the buy within a bar of each other. And if they don't, it doesn't take the trade. So we'll see what happens here. They're starting to consolidate at this yesterday's close, so we could see a hold. But again, missing trades isn't a big deal. It really isn't. You got to get over those things and understand that there's another trade coming. No matter what you do, no matter what style you use, you're going to miss trades, or you're going to be broke trying to catch every trade. Guys, keep in mind, if you sign up for anything today, I will do it. You will get your access after the live stream. I can't do all of it at once, unfortunately. So if you did sign up for the indicator, I see the ones who did. That will be activated after the live stream. And that coupon, those coupons, or those deals on the screen are only good during the live stream. After that, they will go away. 30% off your first month if you want to do monthly. Free advanced and basic courses for Elliott Wave, as well as 50% off of TradeWaves Academy if you want to do that for the yearly. How often are you live? I'm live every Wednesday, unless something changes, right? If I'm out or something, then obviously I'm not. But every Wednesday, I try to do a live stream for trading to show the indicator and how it works. Occasionally, I'll do more than one, but very rarely. Usually, it's once a week on Wednesday. No problem, George. And welcome to the stream, Duke. I was in the Navy with a guy named Duke Wynn. I think it was actually, well, we called him the Duck of Death because of Unforgiven, an Eastwood movie. The Duck of Death. Duca says, um, not much energy on this move up and behind this move. Not yet. They're trying to get the resistance here. I believe they're going to be at over. Are they over the 21 on the ES? They got to be right at it. Let's see who's holding. Yeah, they're over it. NQ might be back at theirs. No, they're over theirs. So they're trying to move up here. NQ far weaker. It moved well below yesterday's close, all the way down to its off the screen to just above its pre-market low. Not tagging the pre-market low is interesting to me. Generally, they're going to come down and tag this, so I would. And like I said, this is not a bad 5-wave move down off of this bounce. So you have 1, 2, 3, 4, and 5 here. 4, 5. Not bad looking. This is bad looking to the upside. You have a lot of overlap here. So in general, you would expect this move to get sold. In general. Not at this exact level, but that's what you'd be looking for. It's a pretty ugly move up. They're just, well, they hit the 618 almost to the T. So 20,000, 35, 20,000, 23,056 or 23,035 area to back up towards the close. We would expect them to try to hold that area. And they did. Holy cowsers. That looks like a Trump tweet to me. Or let's see, what time is it? 7:50. Yeah, it's a random time. It must be a Trump tweet. I don't know. I don't know if it is or not, but that was a big swing there. Can we get the same thing on the SPY? Yeah. Well, that was certainly something. Ask and you shall receive, they say. I think I just manifested that breakdown. We'll see if they can break these lows or not. The answer is yes, they can break these lows. Now they need to really break them. There we go, close that gap. Good job. Now break the lows. A little bit of support right here at 621, but ultimately the next key level is going to be 620.90. That's even kind of a fake key level. We may get a buy here, by the way. You got to keep an eye on this. We will not get a buy. The NASDAQ still has not stopped out of its move. So we'll see what happens here. Well, these are the two biggest bars of the day. Anybody see anything that was the catalyst for this? Just curious. I always like to know what the catalysts are. don't know what that one is. That's what CNC stands for, if you guys were looking for it. I thought it was a music factory myself, but turns out it's computer numerical control. No headlines on the old CNBC. Um, wholesale inflation, that was earlier today. Yeah. Interesting. We're getting wild moves here. It's the highest volume bar of the day on the sell. And this buying candle here, this green candle is also a big volume, almost as much as the open. Going to be as much as the open by the time it closes. Heavy volume coming in. Trump indicated he will try to fire Fed chair is the only thing I see. Ah, I see. A lot of people think that firing Powell will be a good thing for the market. I for one, think Powell's an idiot or a puppet. I think more likely he's a puppet, or he's the. I don't get the guy, but I'm not a fan. But I think it's politically motivated, so I can at least, I think, understand his motivations. You know, the whole 2020 thing pissed me off to no end, with him saying there was no inflation over and over again, and I'm screaming through my microphone, "Are you an idiot? There's absolutely inflation, and it's not transitory. You're a clown." So either he's an idiot, which is a sad state of times, that the quote unquote smartest economic man in the world is an idiot and can't understand how economics work. Or what I hope is more accurate is that he's a political puppet and has to say things that make the politics happy. However, I did say that firing Jerome Powell, the market will not like. That's chaos. The market does not like chaos. That is the one truth of the market. The irony is war is not considered chaos by the markets. It's actually considered orderly and political. But firing the Fed chair, who can and to bring in somebody who can do things that the market is unaware of, that's chaos to them. Because the market actually is the leading indicator and the news is the lagging indicator. The market already knows the news before the news knows the news. Got a little gap here they need to fill. So they did buy this. I mean, I guess it was a green bar, but it's certainly not a strong green bar, and it was, again, now the new high volume of the day. So the volume is on an uptick here. Lots of changes coming in. Lots of flip-flopping. We'll see how this resolves itself. To be honest, I'm glad we didn't get any buy or sell signals, because this would have been all stop outs. You might have, if you got a top sell here, you would have taken some profit down here and then got stopped out on this bounce. This buy would have got stopped out on the pullback. So, we'll see what happens. We're not going to get a buy signal. Again, the NASDAQ never. So if we look at, you see the long stop right here on the SPY. If we go to the NASDAQ, you're going to see that the buy came in right here and it never stopped out. So there was no LS in here. And I'm guessing that's because the volume was weaker. I should say weaker, not weak, but weaker here. It was the high. These two were the highest two volume candles of the day on the ES. The open is still the highest volume candle, and it's a strong sell on the Nasdaq. I think someone put a stick in the anthole. Yeah, the chaos happened. It's ants marching. So you get a couple bars of chaos, and then the market will go back to what it was already getting ready to do. Again, I do think 620.90 will get tagged today, and I do think that, oops, on the NASDAQ, you're going to get the low of the day tagged there at some point. That is at least statistically what we would expect, 22,929. We would expect that to get tagged as well, if not broken. These yawns make me want to go to sleep, but that rooster's not going to let me. ADD is flattened around positive 300. Still seeing NVIDIA red, still seeing SMH way red. Banks and Dow Jones Transports have turned green. RTY is pretty strongly green. As far as for a day, I mean not in general, but a 0.5%. If you consider that ES is flat and NASDAQ is red, RTY is not going to allow a breakdown unless it participates. So we want to see RTY start to fall if you're looking for downside. Back to flip red. If RTY flips red, that would be an interesting development overall. I would expect at that point the market would push down a little bit overall to that low or below. You're seeing the MAG 7. So what you're seeing now is the MAG 7 is weak as a whole, especially if you include SMH in that, which is not a major part of the, it's not part of the MAG 7 at all, but it is the semiconductors, so it's a major part of the bubble. You're seeing the small caps are, excuse me, the small caps are holding strong. So they are kind of keeping the market afloat right now. ES holding strong, flat, not turning red anyway. NASDAQ kind of being the current fly in the ointment. So even with all of that volume and all of that movement, we're still just in the same place. We're sitting right on the 21 in VWAP, trading sideways on a slow moving day. Um, Not a whole lot to say otherwise. Let's see if they push up here. If that sound is that the fan, no, actually it's not. No, feels like an old clothes washer. Closer, that's closer. Um, no, we are. I'm at my. So we sold. We just sold our house this week. We closed on it, or I guess last. I guess it was last Friday. But anyway, we just everything the paperwork all finalized this week. And so we're staying at my um, father-in-law's house until we find the house that we want. And um, he waters his grass, and the area that he's watering right now comes up to a curtain, and the water's hitting the curtain, is what you're hearing. Oh, sorry, I was checking checking something. I got a fraud alert overnight, and I thought I was on a different screen. Forgot I was live hosting. Anyway, that's audio.com. If you guys wanted to know what that was about, I wanted to make sure that that was a valid charge. So, yeah. Okay, NASDAQ has moved into a full-on buy cycle, even though it's a weak buy cycle. Um, ES is close. It's almost into a buy cycle. So we'll try to get one more sell here. If they can get into a buy cycle, we'll look for a sell. If we can get a sell and trade that, we will. And then we'll probably call it for the day, but we'll see how it goes. Right now, we've only had the one trade. It almost won. We're just a few pennies short of cashing it, but missed. And now we're waiting to see if we can get a sell here. Again, if you joined late, we got a buy here, but that stopped out. We did not get a new buy signal because of NASDAQ and how it's working right now. There we go, that's probably better. There's no air conditioning in most of these houses in Washington, and we keep the windows open, so I just closed the window. $63.10 looks like a likely level if this is a wave 2 with the completed ABC, the 618 retrace. Does that sound reasonable? Yeah, in fact, yesterday at the close, I said it was very likely we bounce today. So if we look at the bigger picture. So in my closing video yesterday, my final comments were, don't be surprised if this bounces. We are in, so the 618, yeah. We are in heavy support, so they came right down this level right here at the close yesterday, which was like right here. They were at this level, they spiked it, and then they bounced off of that level. So certainly a very reasonable bounce and somewhat expected. I'm not too shocked that we're slightly green today in an ugly bounce. 6303, 6310 is actually the 764. Oh, I'm sorry, 6320 is the 1.0 of this ABC, so you could see a little bit higher than 6310. But the 764 is a valid C wave target. So 6310 could easily be, and it's heavy resistance. I mean, you can see the line I have drawn across there. There's one, 2, 3, 4, 5, 6, 7, 8, 9, 10 failures at that level. So they've tried 6310 many times. Each time they've gotten above it, they immediately came back below it strongly. So they got above it here, sold way down, tested it, sold down again, got above it, came down, tested it, sold down again. So that level's been a little bit of the fly in the ointment. Oh, there's another big bar down. We did not get a huge volume on these bars. This is a huge volume bar. It's shrinking the open down to a normal size bar. So the markets have been out of sync the whole time. You've seen ES in a sell when NASDAQ's in a buy and vice versa. So we have not seen, well, there's the break of the pre-market low. We have not seen many trades today, unfortunately. That is the way it goes. If they are not in sync, you're not going to get trades because weird things happen. You know, this is a kind of weird thing. A 623.50 down to 620. That's a 2-point bar in seconds. Did Trump say he's definitely firing Powell now? if you're in my rooms, we do have a swing short going right now. We are close to taking profit on that. We're going to take $8.40. Should we get, or $8.50, somewhere around there? Should we get to it? Market is moving quick, so set your stop for it, or set your take for it, so that if it spikes down, you get it. You can 840 or 850. Either one is fine. If you want to be a little more greedy, 850. But I'm going to take 840. Should we see it and get the spike down for it? We're pretty close to it. We're at like 820 right now. Okay, I just got it. So we're going to close half for 840 on our swing trade. That's a 20% win on the first half. And we'll set our stops to, I'm going to set them to $6. That gives us a very, very tiny win if we get stopped out for now. So we're safe on that trade from losing any money. And it gives us $2.40 of retrace. And if they follow through, obviously we'll continue to move our stops down. So 616 would be that level, next level that we're going to take profit, which is actually 616.50. Right around there, we're going to look for the market to find a bounce. If they get there, they got to get there first. But they've broken the pre-market low, so now we are in a potential trend day down scenario. So while if you're on the outside looking in, sorry we didn't get any day trade, or don't have a day trade winner for today yet. We can, if we get down here, I'll take it long for sure off of this 1 day minimum. We don't have a day trade winner yet, but we did have a swing trade winner, a very nice one so far. We'll see if they can continue. If you took 850, nice work. They're well above that now. And the selling there was more volume than the entire day. Not quite. It's close. It's very close. It's at least as much volume as these two bars and the open, and then you can stack some of these others in there. So that selling bar came in on humongous volume, and it's all selling and closed at the lows. So it wasn't like this was a battle where the bulls were pushing it back up. This closed at the lows on huge volume. So you would expect at least a little follow through, which you did get a little follow through, but you would expect. This is the put support level here that we're at, and they're below the true pre-market low as well. So they closed below the overnight low, we'll call it. That is an important development. Let's go look at the other two charts real quick. Oof, it's a good looking crush there. So they're basically at the pre-market low on the ES and pushing. And the volume on ES was huge. Remember, NASDAQ had a big volume opening bar, and that was bigger than that. They're below the pre-market low on the NASDAQ. They're at put support. 22.8 is the 1 day minimum there. So key level here, we'll see if they push through. If they push through that, 22.8 and 616 are likely incoming. And we'll see what we get at that point. Go back to the SPY real quick. So right now struggling with the put wall. If they get below that though, that opens up the negative gamma. can see those Clifford. Well, we just saw Clifford. This is a huge Clifford here. How big was this bar? They were at 623.30 to 620. That's a $3 bar right there on the SPY. That's a huge, huge drop. US 30 is above 5%. Yeah, it was there yesterday. It was at 501 yesterday. Let's go see where it's at today. Let's go see what's going on the bottom of the charts. Tesla's still killing it. Good job, Tesla. Bitcoin back towards 120. Gold ripping. Silver ripping. As you know, if you're in my rooms, we've been heavy in precious metals since a year ago in April, 2024 April, and absolutely destroyed it. They're at 505 now, up another 0.5% on the 30-year. This makes the market unhappy, I'm telling you guys. JP Morgan, after their earnings, is dropping more. Interesting developments here. Where's the banks at? Banks are red again. Transports flipped red. So this was a broad sell. What IWM, RTY flipped. Okay, so everything has gone broad here. Instead of RTY flipped red, we could see them push down. Obviously, that's what we're seeing. They closed below the put wall. That's good. Now they need some little more follow through, and we should come down to 616.50. Right now, they've still only spiked it. If they can reverse back below this low here, then we would be in for continuation to the downside. I still think we probably are in for that continuation, but that's to be determined. Volatility picking up though. They got very extended from VWAP in the 21. This is the first break of the pre-market low, but we did hold put support, so if we do get a buy signal, I will likely take this one. We just missed getting a sell signal. It's been one of those days. We just missed our winning trade here. We just missed getting a sell signal here. The ES wasn't quite through its cycle. So unfortunately, we did not get that sell signal. So it's just been one of those days where things are just a half a step off. And that's part of it. That happens. That is the way it goes. After that monster sell bar, it's going to take a minute for this to assume this isn't a dead cat bounce. That's what it's trying to compute right now and say, is this dead cat or is this going to be a reversal? This bar is coming in with much less volume. Yeah. Bobby. Right, there's the buy signal at 81 cents is what we got. And our stop is going to be 620.90. Oh, darn it. That's a call. Well, that was smoked. Stopped at, let's see, what I get, 61. Ooh, that was a quick one. Yeah, in the first minute and a half of this bar, they've already almost achieved the volume of the prior bar. So the selling volume is coming in strong here. If they break this low, this is now a trend day, and we will be sit on hands for any buy signals. So they came down, broke the pre-market low, back test VWAP, break the low again, and you have yourself a trend day. That is what we look for. We took this buy off of the put support. It was probably a little late. Well, it was definitely a little late, but that's because this volume and this move down tells the indicator this is a serious move. They need to do a lot on this bar to recover. They gave you an engulfing bar, closed it pretty strongly, and then it was just a dead cat. So 0 for 2 today. That's how it goes. Like I said, we've just been a half a step off all day today. Not a big deal. We recovered a lot of it with our swing trade. Actually, more than we lost. So winning day anyway. If you were in my rooms and had the swing trade to the downside so far, you should have a good day. The ADD is now negative 780. That is a, as my dad would say, a precipitous drop. You're seeing some high volume. So I would like to go to the daily here. Let's see what the daily volume looks like. Not super overwhelming. However, this is not a good look on the chart. Major support, or another, not major support. Support here. This is the put wall basically. This low is another. So they broke the low of 1, 2, 3, 4, 5 days with this move down, and they've broken this low. So 1, 2, 3, 4, 5, 6 days. That opens the door down to this low here at 617, and then the 1 day minimum is right here at this confluence of this body low and this spike high. So I do think that getting below the 620 area and holding below it, they're going to come tag 616.50. There is the break of the low that confirms we do have a trend day down on our hands, or at least what we, more often than not, it's going to play out as a trend day down. The NASDAQ leading the way to the downside. RTY caught up to the NASDAQ in a split second. They were leading the way to the upside and now are leading the way to the downside. So that is, like I said, they weren't going to have a big drop today unless RTY participated, and it is participating. Banks got smoked. Dow Jones getting hit. So these guys were all green. Now they're all red. Very smart, a very strong push here. You've converted Meta into a big drop. Microsoft is now 0.5% down. Amazon's 1.5% down. Tesla, the only one bucking the trend. Google slightly up. But for the most part, we're seeing red all over, except for where, our money's invested, which is precious metals. So that's a good sign. Oh, and we are on the red side of the market. So our money's on the right side of the market. The market is on the red side. Getting the Cliffords now. I said if they started to drop, it should Clifford. Here they are. Jack asked me if it's time for Elsa. They've already let it go, I think, Jack. Let it go. Oh man, when Bobby was 5, I think I saw that movie 775 times. It is so annoying. I hate it. It is there are some Disney movies you watch and I could watch this one. All of them get old, but I could watch this one multiple times. Frozen was not one for me, but my daughter loved it. I hated it. Hated it. It's a terrible storyline. Let It Go is an okay song, and the rest of the songs are all terrible. I sound bitter. I saw Lion King 1,000 times. Yeah, John. That one I have no problem watching. That one's okay. But what's the ADD and what does it tell you? Good question, Alejandro. So the ADD is the advanced decline line, and it's negative 1,000 right now. Actually, negative 1,100. And what it tells you is how many stocks are advancing from yesterday's close, meaning going up, and how many stocks are going down from yesterday's close, and the number is the delta. So if you have 1,000 stocks that are above yesterday's close and you have 500 stocks that are below yesterday's close, then the number is 500. 1,000 minus 500, it would be positive 500, meaning that there are 500 more stocks advancing than declining. it is negative 1100, meaning that there are 1100 more stocks declining below yesterday's close than advancing. So it tells you that the market overall is in a negative posture. Um, it can be a little misleading at times because the Mag 7 is so strong. If you get, let's say you have negative 1100 right now on the ADD, which we do, but the Mag 7 was mostly green, you could have a choppy or flat market because the Mag 7 is so strong in that way. So it can be a little misleading at times. I take it and then I look at the Mag 7, and if they're in alignment, very likely we are going to continue the trend. If they are divergent, meaning one's red and one's green, then very likely we're going to see a choppier market. So the ADD basically tells you the overall breadth of the market. And that's not breath like you breathe, that's breadth. There's a D in there. BREADTH. I chuckle when people ask me what the market breadth is. I say, I don't know. Did they run? Probably fast. uh, it's the overall health of the market on a given day. Or over, if you can look at it at different time frames. I look at it on the 15-minute time frame to just kind of give me the health at a given time of the day. And right now it is continuing to decline. So let's see here. I missed some stuff here. The day indicator issued a sell yesterday. Yeah, I covered that at the beginning of the day. That is, everything starts at the 1-minute chart and works its way up. The daily chart issued a sell yesterday. And eventually, if they keep going down, you could see the weekly chart issue a sell as well, which would be a time to short the market. Fear and greed index is still in the green. Yeah, it's going to be, you should be greedy. You should be getting a greedy reading right now. Still on mute here, but just wanted to say the frozen GIF is on the docket. Yeah. Did Bobby prefer to dress up as blue or green? She was Anna, which is the green one. She loves Anna. I like the Lion King theme song at volume 10 through the stereo speakers. Which one, Circle of Life, or I guess that's the theme song, Circle of Life. But you also had Can You Feel the Love Tonight, which was a big one out of there. One of those won the Grammy, I think. Let's move our stop to $7 on the swing trade. So if you have the swing trade, keep in mind that that is the new stop. We are currently sitting at $9 on the swing trade. So we gave ourselves $2 of runway back, and that gives us a guaranteed 10% winner. Obviously, we're looking for better than that. We don't want to be stopped out. I think that goes without saying. But we don't want to. So a key thing about trading is you don't want to let winning trades go bad. Once you've hit a certain threshold, obviously. I mean, you're not going to take a 2-cent win just to have a win. That's silly. But you don't want to. Keep in mind, we will be ignoring a buy signal here if we get one. You don't want to have a trade that's $2 in the winning side or 33% in the winning side and let that go all the way back to a negative trade. That is not a good idea. And if you have a winning trade in the sense that you've taken profit, so in other words, we took $8.40, which was 20%, roughly. You don't want to let that go down to where that 20% win becomes a negative play. So is it possible that they come up and stop us out and we only make 10% on that trade and then they do that? Absolutely. It is possible. However, it's also possible that they go up here and where we would have stopped out, they continue higher and our winning trade turns into a losing trade, and that's devastation. That is a terrible place to be. So you don't want winning trades to go bad. It creates emotional distress. It creates a bad habit of hoping. We call it hopium, where you hope the market will go down or go in your direction, whatever direction you're wanting it to go when it's failing. So we have a short. They continue to climb here, and you have hopium. If you hit your stop, the hopium goes away. Even if they do this, you don't chase it. You don't get back in unless you have a setup or some reason to believe that you should be back in. You just take what it gives you. And sometimes that's 10%, and sometimes that's 100%. But those little wins add up. Again, we are ignoring this buy signal because we are in a trend day. Trend day defined as you start the day, you break either the pre-market high or low. In this case, we started by breaking, we poked above the pre-market high, we came back, we did not hold VWAP. So they come up, they test, fail, we come down, we break pre-market low. We come back, we test VWAP, we hold, break this low. That tells us we're very likely trending down. And the reason is, number one, you've held major resistance. Number two, you have your trend lines pointing down, your moving averages and VWAP, I should say, not trend lines. Number three, you have a high, right? You have a high, try to get there, a low, a lower high, a lower low, a lower high, a lower low, and now until they can get back above 621.78, which means they are above what? VWAP in the 21. Until they get back above that, we are in a trend day down. They have broken the pre-market low. That's your major support zone. They have back tested your major resistance zone and held. Then they made another low. They are continuing the trend of higher lows or lower lows and lower highs. And until that trend breaks, you are in a trend day. Now, this is exactly what trend day lines look like. It looks like Picasso threw a whole bunch of paint on there. No, I'm just kidding. I just keep drawing. But you have that trend to the downside. You can loosely draw it like this. Secondary trend like this. Like this. Can they fail this trend and go back higher? Yep. Is that the most likely scenario for the day? Nope. The most likely scenario is they will continue to chop and or move down. Chop is not tradable, and moving down goes against the buy. So if we get a sell signal, yeah, we would be in. We got that actually yesterday. So yesterday, if you go look, we got a trend day. Even though it was a green start to the day, it turned into a trend day down. And you ignored all these buys. Even though this was probably, no, this would not have been a winner because you stopped out right here on this bar. And we got a sell signal here. They ran through a buy cycle, gave us a sell right off the 21 after back testing the 21 again. And this sell worked out. So we follow the trend. And when the trend establishes itself, we say, okay, we're not going to trade against that because it's proven that for today it's showing that it's not respecting the moves up. And you can see here we got a buy signal. We would likely have stopped out here. Not yet, but it's a weak buy signal so far. They can pop it up here to 621.26. but we are ignoring buy signals now because we are in trend day parameters. With the indicator, with the use of AI, as you mentioned, get better at recognizing trend days. No, we talked about that earlier, and while it's probably possible to figure out something with that, it's really hard to um, it's really hard to have the indicator distinguish key levels that are or are not part of a trend, because it's still trends end, right? And what we want it to find is the end of the trend. What we're typically looking for is the end of the trend within parameters. So they were trending up here into the open. We got the sell signal right before the open, unfortunately, but they hit the pre-market high area and immediately sold off of it. So that's a parameter we're looking for this uptrend to end at a key level, which is the pre-market high, and a high volume level as well. That's a great place to look for a trend to reverse. So it's going to take a trade here more often than not. It did. It just took it pre-market. And if it goes up, then it's going to say, well, hey, the 625 level is also heavy, heavy resistance. It should hold more often than not. So we want to see what happens here. If we get a reversal off of it that we can play, then let's go, right? It's not recognizing that you're starting to see, or it's not recognizing that resistance isn't holding. That's what I should say. So we're going to see it come back up and smack, and then do the same thing. So it has to distinguish what the key levels are, and it does that a variety of ways. And then if those key levels start to look like the parameters for a reversal, the whole point of the indicator is to get you in at the tops and bottoms of moves. Or as close to that as possible when the parameters hit. So it makes it very difficult for programming, from a programming standpoint, to have it understand which key levels matter and which ones don't. Again, it'll be in my email to my coder this week. I take all the questions I get here and in my room and stuff, and then questions I have and different things I see and try. I'm always testing different hypotheses, and like I said, we improve, or we try to. And over the course, last year we made 35,000 for the year. This year we've made 35,000 in 6 months. So I think we've improved. So we're always trying to improve, and if we get there, we get there. But that's not something that I concern myself with. I just follow a simple rule of we broke the pre-market low, we back tested and held, we made a new low. I can sit out. I mean, it's a very simple rule. Do you have an Elliott wave calculation of the big correction? I do. I've gone over there. I have videos, 2 different ones. The big picture is probably the best one. It's the older one, because the updated one, because this, well, hold on, I'll pull up the chart because we're not going to get a sell here. And then after this, I'll be on the stream here for a little bit longer, but we're going to cut it pretty soon after this. So as soon as all my things load here, waiting on the chart, I think I'm overloading my computer. So you can see I have this line drawn here at 1600. This line is the overall target for the correction. People think I'm crazy, but if you look at how the market works and you understand price action, okay? What happens is the markets always come back to test levels. I can show you this over and over and over again. This was a major, major, major high. The reason we know that is because off of that high, we got a 10-year correction. And this is what people forget. When I say we're in for a decade or more correction, they're like, when has that ever happened? Literally 25 years ago. Right here at 2000, we peaked at about 1600 or so, and we dropped all the way down to 666. Now, quick math tells you that's about a 60% drop over 10 years. 2/3 of the value of the market went away. When the market makes a level, it always comes back to test that level. So they made the level, they tested it here, and then they failed lower. So this was a flat. This 4 was a flat, an expanded flat. Now we're building, obviously, the move up. Well, what happened was after 3 and 4, which was COVID, so the top of 3 was before COVID, and then 4 was after COVID. After 3 and 4, which 3 is actually a little out of alignment, it's right here. We got the expected move up. So COVID came right back to where? This breakout right here. So we tested this breakout. So how price action works, sorry, let me backtrack a little bit. So I'm going to show you what should happen and what does happen and why we knew COVID was going to bounce and what we were looking for and why we thought this rally would be really strong. 1, you had 3 waves up, right into the 1382 here. 2, you had, so the reason this area was such a big buying area, if you're paying attention, is because it was the last breakout area. They made a high. So they came up here, they made a high, they pulled back. So we know that this high is important. They pulled back. They broke back out of this zone, right? And then they never fully tested this breakout zone. They will always come back and test. Then they came back up, and then COVID came back to where? Test the breakout. Then we got the rally that we were expecting. We got 1, 2, and 3. Wave 4 comes down and overlaps. Well, that creates a big problem. So at this point in time, I said that we would rally back to about 4,300 or so, and then we should see collapse because wave 4 got into wave 1 territory. Does that mean we can't have a diagonal play out? No, and we did. Diagonals at this scale are exceedingly rare. So I was not confident at all that we would make new highs. Although, if you watch my big picture video, I said that 6,300 to 6,500 on the SPX was our target all the way back here. Nope, that's 15. All the way back here. At about 3,700, I said we're looking at about 6,300 or so, which we hit on the penny just the other day, yesterday. So the big picture is looking for or was looking for, at that point, continuation to the downside. Obviously, it ended in a diagonal, so that didn't happen. You have your A and your B and your C up. This is wrong, by the way. Now we are waiting for this 5th wave to end. So you have a pretty clear diagonal here. And we're just waiting for the 5th wave to end. And once we see that, we are looking for an initial correction back into this 3,500 to 4,000 area, or 3,518 to 4,000 area. That would be the initial move down. So we're looking for like an A, B, C of A into the COVID lows back toward this area. Then you're looking for a bigger bounce back probably up towards 5,000 or so. And then you're looking for a nasty move down into the 1,600 area. And that should take about, well, over 10 years up to 20 years, in my opinion. Because this is a correction of a lower degree. The blue is lower than black. This is a correction of a lower degree, and it took 10. So the higher degree correction should take longer. You also have a very, very fast wave 2. So if you zoom back out here, wave 2 was when? Does anybody know? in black, the Great Depression, and it happened pretty quickly. It was straight down. So the theory of alternation tells us that wave 4 in black should be really, really long. So you have a long correction here that's lower degree, you have a long correction coming that's bigger degree, and you had a wave 2 that was sharp. So this should be a very long, drawn out move where this move down will probably be very fast. Then you're going to get a bounce, and this bounce will probably be really ugly because it's going to be a B wave of A. Then you're going to get a sharp move down, and that's going to be A. Then you're going to get a really, really ugly B wave that chops out. And then you're going to get a nasty C wave, and then you would look for the recovery. So that is the projection for that, and why I think the way I do. This has never been tested. 1600 has never been tested. Theoretically, the theory of alternate, or the corrective depth theory, tells us we should test this low, wave 4 of 1 lower degree, all the way down at 600. However, for inflation and other things, and the reason and the support level here that we have, I do believe 1600 will likely contain it. And then we'd look for the next leg up in 5, and then we'd be looking at another, corrective move after that. Trump is saying he's not going to do anything to Powell now. Yeah. Well, the market went down. Yeah. So you think if and when returns to 1600, that would be the bottom and start a new uptrend? You just answered that. Yeah. So if that happens, yes, I do think that 1600 would likely be an area I'd be looking to pile into the market. I don't think that once it hits 1600 on the penny, I'm going to be like all in. But if you get this, I will pile into the market and say I have a really nice backstop here to hold, and looking for this kind of return on longer term investments like 401ks and such. There's going to be some great buying opportunities still. When you get to the bottom of this move back to the October of 22 lows, this is going to be a pretty good longer term buying opportunity. When you get down here, this would be a pretty good buying opportunity. When you get down here, pretty good buying opportunity. So people think that just because we keep going higher that the thesis is broken. It's not even close to broken. In fact, we're hitting the original targets I said we'd hit all the way back in 2021. So 4 years ago, I said we'd be here, and we're here. Now, again, I just told you that when this wave 4 came in, I adjusted my thesis because we got into wave 1 territory, and you don't expect diagonals of this degree. But it is certainly a valid Elliott wave theory expectation. It's just not one you expect. So you always play the probability. And we got basically what we wanted. We got this move up and this pullback. We just expected this pullback to be bigger. We expected that to be it. Now, if you were following me here, back when we hit this top, I said that it was an unfinished top. There's no 4-5 up here. There's no pullback and higher, right? This is just straight up into this level, and it's what you'd expect because it's wave 3. But then we got no 4-5, so I said this is really weird for it to top here. It's a pretty clear 3-wave top. But we did get into wave 1 territory, which complicates things. So it definitely got complicated, but the projections from Elliott wave were 6,300 to 6,500. Let me see where we're at on the charts. Let me see if there's any sell opportunity. No, we're still not into the buy cycle. This is such high volume that it's going to really cloud things. So when you get a couple of high volume bars like this that are, this is the opening bar. If you go back and look at most days, let's just shrink this a little. Yesterday wasn't one of those days. You had big middle bar and then some equal bars here, but the opening bar is generally one of the 2 or 3 highest bars of the day. The closing bars are always going to be higher, there's no question about that, but other than the closing bar, your next highest bar is the opening bar right here. You know, closing bars are always going to be different. Other than the closing bar, you had one bar above the opening bar, and then the opening bar was the next highest. The closing bar are these 2 bars. The 50, 55 bars. So other than the closing bars, the opening bar is generally one of your highest of the day. Well, today it's not even close. Like this is like a closing bar in the middle of the day is what it is. You can see yesterday's close, they dominated that. Yesterday was an uptick in volume. So yesterday's close, you had 2 bars of selling way over that. So this is going to cloud the indicator because it's going to say, hey, volume is heavy on the sell side. We're going to give you buys where buys are, but buy cycles are going to take a while to complete because we don't believe in them, if that makes sense. There's been information put into the system that says buying is weak, selling is strong. We will favor the sellers, and it will be harder to complete a buying cycle. Doesn't mean you can't make money. If you took this buy here, you probably made money. We ignored it because that's how trend days work, and you might miss a move or two. That's what it is. But it has not completed a buy cycle, and it's still several bars away. So I do have a call in an hour. I do have to use the restroom and do some other things, so I am going to shut it down here. If we get a sell, obviously we would take it. We'll see how the market plays out the rest of the day. But we did get a spike down. Let me look at the bigger chart here real quick. Yeah, so we got a spike down lower than this 4. So we could very, very easily have completed the flat. I would still like to see him get down into that 62.17 region. So this would be like A, expanded B, and C that move down. I still would like to see him come down into this area here to complete it, but it's very possible that the flat completed, and we're trying to now race back to 6,400. So we'll see how it plays out, but we notched a win guaranteed on our swing trade, and we have fulfilled the pattern that we were looking for. So I said yesterday this would look much better with a lower low than this 4. We got that. Did we get it on the NASDAQ as well? No, NASDAQ came down. So NASDAQ's still kind of ugly in its pattern. Would definitely look better with a lower low here. So that does give you some context that you could see continuation to the downside into 22.6, but they hit that 22.8 area, which I mentioned was very strong support, and they bounced off of that. So things playing out basically how you'd expect, except for the chart was a little wonky today in how we developed our signals. So we just missed a winner here. We didn't get a winner here. We didn't take that one, I believe. Did we only have the 1 trade today, or did we have 2? We had 2, right? Yeah. So we had 2 trades. No bueno. You ignore the random. So this is a little bit random to me. They spiked below the pre-market low, or the the put wall, and then they reversed on, decent volume on this low, but not a great reversal bar. But this bar here is pretty strong. So we'll see how it plays out. Once they broke this put support, I expected them to hit the 616 area. They still might. They can reject. This is a big selling bar right here. It's going to be a huge area, 623.25. They get above that though, and they can start to squeeze to the upside. So just be aware of those things. Let me see if there's any questions I missed. No questions. Don't forget, guys, if you got anything out of this, if you enjoyed it, please help me by hitting that like button, subscribe to the channel, share it, share the video, comment on it. Whatever you got to do that, and show the support. I appreciate it. And then sign up, guys. These codes go away here in about 15 minutes once I get everybody activated. And once that happens, we would those codes will go away. We'll be back next week on Wednesday to do it all again. And then if you're in my room, we'll have the live call here in about an hour. All right. Thank you, guys. I really appreciate it. And it's fun trading with you. I like the comments. You guys make me laugh. And that makes trading fun. So hopefully you learned something today and got something out of it. And we'll see you again next week. Thanks, everybody.